Hey y'all, let's make a quick video about Oracle here. Let's talk about Oracle and why it's being punished. Yeah, after last quarter earnings, September 9th, it flew to all new level, incredible surge to about 330, and that's based on its deals and projections and the demand that it's seeing. Here you can see the cloud infrastructure was up 55% to 3.3 billion, and then their backlog remaining performance obligations. These are obligations that are concrete deals where both parties are committed on both sides, are up 359% year over year, which is mind blowing for a company this size, and it's at 455 billion. I mean, that's just incredible. So, one of the reasons, oh yeah, there was also the deal with OpenAI, a $300 billion OpenAI partnership deal, and it says 65 billion in quarterly commitments to fuel optimism. And then later on, it also upped its projection by 2030 from 144 million to 166 billion. So all these things, it was announced to bring up the stock price, and not just announced, but figures, and it still somehow fell all the way down to where it is. And one concern was the margins, because somebody pointed out the present margins are about 14%. Here it is. Now it says Oracle generated 900 million in revenue from its AI server rentals, but recorded gross profit of only 125, which is 14% margin. And so, yeah, it's not as high relatively to its other cloud offerings. In this article here, it says this analyst wrote, I think it's an analyst at Bloomberg Intelligence says, given this business still is in its infancy, it's highly likely that the profit will improve over the next few years. And jumping back and forth between these articles, there was one that said, here it is. The database giant had attempted to calm investors' nerves during a financial analyst presentation on Thursday by projecting that AI infrastructure business would achieve gross profit margins of 30 to 40% by 2030. Now, yeah, people are skeptical about that because they did not disclose how much finances it has to raise to be able to build the infrastructure to be able to hit those revenue targets. And there's a cost to it. So you would think that it's that cost to borrow is baked into their target, but they have not shared any plans about their capex expenditure plans and how to raise money. So a lot of analysts are basically, in short, pitting the odds against them to be able to reach that, and those nice numbers basically. And with all the pessimism that it has generated, the stock has somehow declined to where it is today. All right, yeah, so that's it for this video. I think I just covered a few points there. I mean, there's also competition too. The hyperscalers do have their own data centers and what have you. And yeah, I think that's all I want to cover for now in this video. We'll leave it at this point, okay? I hope that helps you out. If there's any questions, just let me know in the comments, and I'll best try and answer it. Catch you next episode.